Welcome my friends in this video. We will see if XCN coin can make a return from here. Don't forget to subscribe and like, and please watch to the end to understand. The ongoing downtrend has created an important resistance zone that is suppressing price action. As the price moves step by step towards this falling trend line, the attention of traders in the market is focused on this critical level. From a technical analysis point of view, such falling trend lines are often seen as sellers' hotspots. However, as the price tests this trend, and especially when a strong breakout occurs, supported by trading volume, the direction of the market can change completely. Such a breakout can boost traders' confidence and breathe new life into the market. In particular, an upside breakout of downtrends is often considered a strong buy signal. After such breakouts, the price is likely to turn previous resistance levels into support and start a new uptrend. Looking at the current state of the market, we can observe that as the price approaches this trend line, buyers' interest has increased and volume has started to rise. This is an important factor that strengthens the possibility of a breakout. If the price manages to break this downtrend to the upside, a serious upward movement could begin in the coming period. Traders, in particular, follow trend breakouts with great interest, and such situations often give the market a new impetus. If the price breaks through important resistance levels after the breakout, it could contribute to further bullish momentum. One of the most important things to note about downtrend breakouts is how strong the breakout was. If the price tests the trend line and then breaks through it on strong volume, the probability of a continuation of the uptrend is quite high. However, breakouts on weak volume often lead to the possibility of a fake breakout, and the price may retrace back into the downtrend. Therefore, the trading volume, the time frame in which the price moves, and other technical indicators should be carefully monitored to confirm the trend breakout. And a lack of confidence may occur if the trend does not retest after the breakout. Analyzing the current price movements in the market, we can observe that according to the Elliott wave theory, the first wave has been completed, and the second wave is currently in the development phase. According to the Elliott count, the second wave should move in accordance with certain rules. The most important rule is that the second wave should not fall below the starting level of the first wave. If the price dips below this level, the current Elliott count becomes invalid and requires reassessment. However, if the price maintains this critical threshold and finds support from the current levels and turns its direction upwards again, there is a high probability that the third wave will begin. The third wave is known as the strongest and longest of the Elliott waves. From a technical analysis perspective, the third wave is usually the phase with the highest momentum and signals the start of a strong trend. If the price starts its upward movement after completing the second wave, the first targets of the third wave will be the resistance levels marked by the yellow and green lines. These levels are important reference points derived from past price movements and technical indicators. As the price moves towards these points, it can be expected that more buyers will step in, and the uptrend will gain momentum. When the current market structure is analyzed, it is possible to say that the second wave is in a correction. Corrective waves usually occur when traders sell profits or the market experiences a temporary pause. However, such corrections are part of healthy price action and are necessary for major trends to continue. In particular, an increase in volume and bullish signals on momentum indicators at these levels will confirm that the trend is gaining strength. Looking at the bigger picture, with the start of the third wave, the market is expected to enter a more aggressive uptrend. The third wave is usually one of the most profitable phases for traders because price movements gain a clearer and more distinct direction. The third wave is a very hard wave. It comes out of nowhere and people are surprised. Looking at the current price action, we observe that a strong double bottom pattern known as the W pattern has formed. This pattern is often considered as a trend reversal signal, indicating that the price may initiate an upside move. Currently, the price is trading at the second bottom of the pattern, which is a critical support zone. If the price receives an upside reaction from this level, the conditions for the completion of the pattern will be met, and the price can be expected to rise up to the beginning of the pattern. However, it is important to note that if the price breaks below the previous low, the pattern will lose its validity. In such a case, it is possible that the market will start looking for direction again, and the current bullish expectation will weaken. W patterns are of great importance for market psychology. This is because traders are known to carefully monitor the buying from the previous low and whether support levels are maintained. The second low is often considered a zone where selling pressure subsides and buyers step in. If there is enough buying interest at this point, a strong foundation is laid for the completion of the pattern. So, an upward reversal from here could be an important sign that confidence in the market is growing, and buyers are taking control. One of the most important features of W patterns is that the price tends to reach the target levels upon completion of the pattern. Usually, when the upward movement of the W pattern starts from the second bottom, the first target is the starting point of the pattern. If the price continues to move with a strong momentum once it reaches this point, the target level of the pattern may also be exceeded and new highs may be tested. Also, after the completion of W patterns, buying pressure may increase due to investor psychology. This is because such patterns are known to many traders interested in technical analysis and are considered as buying opportunities. With the completion of the pattern, buyers may be expected to enter the market more, which may cause the price to rise faster. One of the most important technical factors in this process will be the trading volume. For W patterns to work successfully, volume should increase at the second bottom of the pattern. If the trading volume is low at the second bottom, this may indicate that the buyers are not strong enough and the price is in a fragile state. However, if there is a significant increase in volume, this indicates that buyers have entered the market strongly and are supporting the bullish movement. Looking at the current outlook of the MACD indicator, we see that it is moving below the zero line and trending downwards. This suggests that the market has weak momentum for the time being and the bearish trend is continuing. However, this does not mean that this situation will last forever. This is because the MACD is often used as an indicator that predicts trend changes and can initiate an upward movement over time, allowing the market to gain momentum. One of the most important scenarios in the current conditions is when the MACD takes an upward turn and intersects the signal line. Such a crossover is usually an important signal that buyers are starting to gain strength in the market and the price may be preparing for an upside move. If the MACD makes an upside cross below the signal line, a positive momentum may build in the market and a bullish move may begin. In this case, traders are likely to be bolder in opening buy positions. In particular, the MACD approaching the zero line indicates that the market is at a critical juncture. This is because the zero line acts as a strong support and resistance point on this indicator. If the MACD makes an upside cross below this level, it could be a sign of bullish strength. When the MACD makes an upside crossover while moving below the zero line, it is often considered one of the first signs that the market is starting to recover from the lows. During this process, the price is expected to hold at certain support levels, and then buyers are expected to increase their strength and push the price up. If the price is receiving strong buy reactions at important support levels, at the points where the MACD is signaling to the upside, it means that the bullish move will be stronger. However, there are a few factors that determine how high the price can go after the MACD crosses to the upside. First, one should pay attention to which resistance levels the price action will approach when the MACD crossover occurs. If the price is heading towards a strong resistance zone after the MACD crosses to the upside, it may face selling pressure at this level, and a short-term pullback may occur. However, if this resistance level is broken, it becomes possible for the bullish movement to continue and the price to reach higher levels. We need to patiently wait for the upward cross of the MACD. Yes, friends, that was it in this video. Don't forget to subscribe and see you in the next videos.